There appears to have been some big payment that's going through, an ECB payment or some other kind of repayment, which is putting a little bit of pressure, aside from the fact that there is the feared continued depreciation of the yuan and the risk of, as a result of that. Let's resume our conversation. Okay, it's almost touched 65. Okay, rupee is 65 to the dollar. Now, this is a bit historic. Did touch on September 6th. That was the time it was receding from 68 to 65. It was 2 days after the new governor took over on September the 4th. The rupee was actually receding, or rather the dollar was receding, rupee strengthening, of course. It had strengthened from 68 to 65 in those 2 weeks starting end August. And after that, we've never quite gone back to that level. This largely a result of the Chinese devaluation, leading to a bit of a risk of across several emerging market currencies, including India. We just have some guests joining us. We will get to Mr. Chand in just a minute, since the rupee has reached a psychologically important level. Ashutosh Khajuria, the Federal Bank Treasurer, joins us. Mr. Khajuria, will 65 unleash some level of, puts and calls on the rupee, or sells and stops in the rupee, that you will see it now go very rapidly towards 65.25 or thereabouts?
See, if you just see the charts and all that, there has been a channel, there has been a break, decisive break out of that channel. And according to that, 65.20 appears to be a strong resistance. Going by fundamentals, if you see the real effective exchange rate, there is a scope for at least 5 to 6% depreciation, going by how the inflation has shaped out vis-a-vis the US inflation and all. Also looking at the competitive economies like China, Thailand, Malaysia and all, there is a scope for about 3 to 4% depreciation. So that way, breaching 65 may be a psychological number or so, but I think it is not going to hurt the trade particularly. Only thing is, if it would have happened smoothly in stages, say 10-20 paisa a day, then it would have been well absorbed by the economy. Okay.
Well, I'll just read out the numbers that Mr. Khajuria referred to. According to the last RBI bulletin, according to a comparison with about 6 countries or currencies with which we have maximum trade, the rupee is 10% overvalued, going by 2013-14 base. The rupee is overvalued even after the kind of depreciation we have seen. So if it was 10% sometime last month, it must be about 8-9% overvalued even at current levels. And if you took a 2004-2005 base, we were overvalued by 24%, and maybe now would have gone down to 20% or thereabouts. But clearly still in overvalued terrain, which is why we have a lot of people saying that 65.5 as well cannot be ruled out. Mr. Khajuria, what was the immediate proximate cause? Did we see some big movement, big purchase orders by FIIs, corporates? Who is doing the dollar buying?
Since morning, we have been noticing, lots of foreign banks buying, and there had been a good demand for greenbacks since morning. I think it could be for 2 reasons. One could be for trading positions and all that. The other could be the actual, the demand by, importers suddenly trying to cover their position, looking into the possibility of further depreciation. So both, it could be trade backed as well as could be the position backed.
Okay. Ashutosh, Raina of HDFC Bank is with us. Ashutosh, Raina, is this smelling of any RBI intervention at all? We were told that at 64.99, public sector banks were selling.
No, I doubt there was any intervention today. If there had been intervention, so we could have seen much lower levels. Okay. I think it's the market dynamics at the moment at work today.
And any specific dollar buyers? Were they FIIs?
Maybe there can be some FIIs, but mostly we have seen some importer buying in the markets today.
Okay. Khoon Go, the senior FX strategist at ANZ Research, is joining us on the phone line from Singapore. Khoon, what is the impression you have of the rupee? Is it depreciating in step with other Asian currencies post the Chinese devaluation?
Yes, the rupee is certainly getting caught up with the devaluation in the Chinese yuan. In fact, the rupee actually lagged behind the moves in other Asian currencies over Tuesday and Wednesday, and perhaps it's just doing a little bit of a catch-up today. I think a couple of other domestic-related factors probably contributed to the rupee's decline past 65 today. One is a comment by one of the RBI's external advisor, suggesting that the rupee needs to be adjusted downwards, and also the fact that the Parliament, the upper house, ended their monsoon session early without passing the GST tax reform bill. So that's been a disappointment for the markets, and I think that's also led to the decline in the rupee today.
Okay. So what kind of levels are you expecting the rupee to go to?
Well, it's actually hit our year-end target of 65 now. We were expecting a decline to 65 only by end of the year. Obviously, the moves by the Chinese authorities to weaken the currency has brought forward the decline. I think from here on in, given that the Chinese currency is no longer playing a bit of an anchor role for the rest of the Asian region, I think we'll probably be set for a little bit more depreciation in the rupee over the rest of this year, particularly as we expect the U.S. Federal Reserve to still hike interest rates in September, which will send the U.S. dollar stronger.
Even as we speak, the Indian stock markets have given up almost all their gains since morning. Now in flat terrain, the Sensex and the Nifty, the mid-caps could dip into the red any minute. They're just, the index is only 3 points higher than yesterday's closing levels. The Bank Nifty as well has shed all the gains that it had notched up, now up just 0.3%. Khoon, do you think FIIs are selling, foreign investors are selling Indian stocks?
Yes, I believe that foreign investors have actually been pulling funds up from not only
you heard anything today?
The Asian region generally. And I think part of this is due to concerns about what China has done, and also in part given the increased volatility and also the concerns about growth in the region. I think that's why we're seeing investors pulling some funds out.
Okay, our in-house market expert Anuj Singhal has also joined us. Anuj, what does this mean to you? I mean, it's still about 0.2% higher than previous levels, but giving up its gains.
Yes, Lata, remember when the market opening had taken place, the clear indications were that if the market trend has reversed, then this morning was the perfect opportunity for the strong bears to come back in this market, use the 200-day moving average of 84.50 as stop loss and go short. Not surprised one bit that this has happened, because the trend of the market changed on Monday. Over the last 2 or 3 days, you have seen significant weakness, and what really spooked sentiment is this large FI sell number yesterday. And with the way currency has again depreciated today, you get a sense that some more selling has taken place. This Rajya Sabha being adjourned sine die again is telling you that all the hopes that were there on GST not being passed are not, are fading. And you'll remember in the morning we said 2 points. One is if GST does not go through, and if
there is no rate
cut today during the day, then you would see the markets turning into the red. That could happen. And so not surprised one bit that you've seen this bit of downtick, but it's likely to be volatile. And I'm more concerned about the mid-caps, because the Nifty and Sensex will still be fine. If the problem comes in the second half of selling, it will be in the mid-caps.
Yeah, and I think the mid-caps now have moved about 4% lower than their recent highs. Yes. So that would translate to some very sharp downticks in specific counters, where it would be as high as 25%, and that could definitely hurt and create its own downward pressure. Mr. Khajuria, is it legitimate to expect rate cut moves by the Reserve Bank in a context of currency volatility?
I don't think. Very recently we had our review and all. So just because yesterday we had CPI and IIP data, and tomorrow we are expecting WPI, I don't think it would be done in a hurry, because if the currency is depreciating and all, and with this type of volatility, and you have intervention happening on the side wherein RBI may like to reduce the pace of depreciation and try to arrest volatility, I don't see cutting interest rate would be the priority. They can wait.
Okay. Khoon, are you all factoring any action from the Reserve Bank after yesterday's lower than expected inflation number? I think we've lost our connectivity with Khoon. Well, that then is the market. Ashutosh, Khajuria, what is the next level you would watch out for?
65.20 immediately, and the next level would be around 65.80 or so.
Okay, and you wouldn't you wouldn't be surprised if 65.20 came today?
See, in a momentum, it can happen. 50-60 paisa movement has been seen in the past also.
And you didn't smell the Reserve Bank anywhere yesterday, today?
At least not noticed.
All right, Mr. Khajuria, thank you very much for joining us. Ashutosh, what is your sense? We could take fresh lows for the rupee today?
I think, frankly speaking, we are somewhere near the top. I think a lot has been factored in since yesterday or the last 2-3 days. So I think 65.50 should be topish for this move. Where I think RBI should step in and reduce the volatility.
Okay. Thank you very much for joining us with your thoughts as well. So that's the word from the currency markets. Nobody is grieving that the currency is lower. If anything, there is a request from India Inc. that more should happen, and the arithmetic demands it. I have some figures, but it is just that it's a day-old figure. The rupee was the best performing currency other than outside of Argentina year to date. It actually, adjusted for inflation, has appreciated by, or it's risen by 4.8% in terms of the dollar, if you adjust for inflation of the two countries. After discounting for the 2 days of depreciation, we would still be 4% in terms of returns vis-a-vis the dollar, and that is the best performing currency. Next to it, of course, is the Chinese currency, which also was in an appreciating mode, adjusted for inflation again. After the recent depreciation, there the gains would have gone down to 2%. Rupee has rewarded maximum investors who have been in that currency. So there is a crying need on the part of India Inc. that we should allow it to depreciate. And that adjustment, I think we have adjusted by about nearly 2%. 2%. The devaluation, Chinese devaluation is 5%. So maybe you could see a little more, but these things never happen, one-on-one. The point is there'll be a downward pressure on the rupee.
Indeed. Lata, just a word on the profile of stocks that's falling now. It's again the expensive bracket, and clearly numbers not matching up to expectations. Page Industries, I think, is a classical example. Look at the intraday chart of Page Industries now. 1,000 rupees gone on that one in a matter of a few minutes.
We saw that in MRF. And
we saw that in MRF, and now look at Page Industries, 6% lower. And it's not as if, we have seen massive disaster of a number. Yes, the numbers are bad, but clearly it's because the stock had rallied so much and had factored in much better numbers. That's why you're seeing this kind of trend on Page Industries, and even other favorite mid caps like SRF, Reliance Communications, Reliance Infra, MTech Auto. All these stocks are seeing a bit of sell-off now. Havells, Jubilant Foodworks, I can add so many names right now. McLeod Russell, all these stocks now seeing quite a bit of selling pressure.
JSPL. JSPL was perhaps a sitting duck. Even Nalco, that stock has dropped 8%. Yes. So, bad results are being punished by the market mercilessly. And besides that, of course, even stocks which saw recent gains are coming into a serious amount of profit taking, you'll have to say. Yes. Okay, that's the market at this point in time. 0.25% higher still for the Sensex and the Nifty, but mid-caps just about 0.1%. So flattened out completely for the mid-cap space. I assume that at this point in time there will be more trading opportunities. We'll do one thing, we'll take a break and come back with a technical expert to spot some trading opportunities.